The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 6th, fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in right now, 877-927-6648. If you can't dial in, that's okay. You can always send me an email, steve@tfnn.com. Just inside that subject line, put radio show question. And, of course, inside the Tiger's Den, well, there, any ping will do. So let's go ahead and get this show started on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 33 bucks. She's printing out at 22,741. S&P down 6. NASDAQ is flat. Russell's off 4. Semis are up 2. You've got gold up $4. Silver's up 20 cents. Light sweet crude back $1.47. So we've got plenty to look at and some cool things that are going on inside the charts, kind of the make it or break it levels for certain things, and we'll take a look at those. Of course, I do want to look at what you want to look at. Leading the charge, by the way, to the upside, you got Amazon up $12, Priceline up 10, Google's up 8, Herbalife is up $6.50, China Lodging Group up 6. To the downside, Sanderson Farms struggling, nearly down 8%, almost to about $13 the downside. Costco off nearly 6%, or $10. Helen of Troy down 7.77. Someone pull the one-arm bandit on that one. That's off about 8%. Rhythm Pharmaceuticals down 5. Shopify down 4. And so let's go take a look at the markets, go see what they are doing. Now, I'm only going to speak right now to short-term traders. So if you're not a short-term trader, I am not speaking to you. I'm speaking to you about what the market is doing, because the market is giving us a signal that it's doing everything in its power to try to pull back a little bit of retracement. Now, the signal is not the mere fact that you've got the Dow trading down 33 bucks or the S&P down 6 or 7 bucks. Sometimes that doesn't mean diddly. But if we do take a look at this right here, what you're going to see now, this is all going to be dependent upon what happens at the end of the day. You know, I hate to say at the end of the day. But if we take a look at the New York Stock Exchange, as of 1:09, here's what we know. The advanced decline oscillator reading, that happens to be my bottom panel of the screen out here, is now dipped below 0. What we have seen is a succession of lower highs that have been forming as price has been moving higher. That's referred to as a divergence, a bearish divergence. Now, bearish divergence doesn't mean the sky is going to fall and all that kind of stuff. It just means that what we should anticipate and expect is some type of retracement to occur. Could just, but more likely than not, it's just kind of a consolidation move forward. Now, what happens if price closes back above the 0 line? Well, it'll tell you about the strength of the internals inside of the market. So that's number one. And you'll want to check back in on that at the end of the day to see if it closes below 0. However, even if it does, and I'm only talking to you as short-term traders, depending on what vehicle it is you're trading. If you're trading the futures, maybe hold on to it. If you're in one of the triples or something like that, probably you close it out. I'm going to give you what that parameter is and the reason why out there, because perhaps by Monday morning when trading starts, you know, a small little profit will probably have turned into a loss out there. I say probably because I can't guarantee what the markets can do, but we're pretty good about reading about what these signals mean to you and I. So right now, this is the first signal. This is the daily time frame. So it's important. Because it's just simply important. I don't know what else to say beyond that. Now, the second message that has occurred thus far is the market breadth inside of the S&P 500. And this is brought to our good friends by Taz, John Logan out here. And what we can see, this is just a 60-minute chart. This is the reason why I'm only talking to those of you that are short-term traders out here. Because as you'll see as we go through the other time frames, they are still with a bullish bias. Here is a bearish bias because we have now more issues inside the S&P 500. By more issues, I mean 200 to be exact, that where price is trading below the bottom of its profiles. That says you eliminate one side of the trade, which would be the bullish side. In this case here, you actually eliminate the neutral side of the trade and says that in those instances, the bottom of the boxes should be resistance. And therefore, those prices should move lower. So this is just simply take a look at market breadth, because on the bullish side, price trading above the top of the box, you've got 156 issues, or 31%. So we can see that on the under the covers, so to speak, out here, short term, there's a slight problem. Now that's the 1 hour time frame. You will see that when we switch this to the 4 hour time frame, we're still in bullish bias mode out there. What do I mean? 182 issues where price is trading above the top and 117 below the bottom. The daily out here, very bullish. The weekly out here, very bullish. Now look, these market breadth statistics are really kind of lagging type indicators out here. So that's why you pay attention to, hey, what's going on the 60-minute time frame. And then if the 240 falls and then the daily falls, you know, it has more meaning out here. But the reason why I would suggest to you, let's say the reading here is correct with regard to the data that you and I are looking at, and that the market just simply continues to pull back throughout the day out here. The problem is that if we go take a look at what the spot volatility index is doing, because it's a cool tool to use, what you're going to notice is up 95 cents. Now, you might say no big deal out there. And I don't have a problem if you say no big deal. But the big deal is it is up by 10.34% out here. And anytime the spot volatility index closes up by 10% or more, what you see over the course of the next 48 hours, and I can tell you over the past couple of years, it has been within the 24-hour period, you see a bounce or bottom. Right? And when we know that the 240-minute chart and the daily chart and the weekly chart is a bullish bias, more likely than not, it becomes at least a short-term bottom. In fact, this case here, I would say it's a bottom enough to at least see the S&P 500 go back and spike its highs at least one more time, if not more than that. And I would ask you, well, why does Steve-O say that? Let's go take a look at it. Has something to do with wave counts, I'll tell you that. But we'll go take a look at it when we get back from this break. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So what I was referring to, and a reason doesn't have to work out this way, but so we know on a short-term basis, at least on the daily charts, we know we've got the advanced decline oscillator now below zero. By the way, when that pops back up above zero, you always need follow-through on any type of technical tool or indicator that you use. So meaning the following session on a 10-minute chart, you look at the next 10-minute bar out there, on a daily chart, the next daily bar out here. So if the advanced decline oscillator finishes below zero, pops back up on Monday at the close, it tells you that sellers never had control. It was always buyers. That's the interpretation, and it's a good interpretation of that tool out here. And that's the danger here with regard. Now, the ideal thing, if you're a short-term bearish trader, would be for that advanced decline oscillator reading to remain below zero, for the market breadth that you and I looked at to remain in that bear stance. And I'm saying short-term, I'm referring to 60-minute time frame-ish type traders out there. Nothing beyond that. That means you stay inside the 60-minute charts to make your decisions and so forth. So we look at other things, patterns, market profiles, and so forth. But if it gets above that 10% level out here, if we take a look at it, I just need to change over. I meant to do this during the break, and I just didn't do it. But it's the S&P 500. And assuming that the S&P 500 doesn't make a new intraday high today, and I don't know whether it will or it won't. I can tell you where we're at as of 119. And if it doesn't make a new high out here, then that opens up the door. First of all, on the daily chart for the S&P 500, we're likely not to see a bearish reversal candle. You can see an A to B equals CD pattern that we have out here. So this candle session that we have inside the S&P 500 out here is nothing more than what they call the pause button. And therefore, you put all that together, says you go up and at least make a new intraday high. Could be Monday, could be Tuesday, could be Wednesday out here. It really depends on that spot volatility index to help us with that next assessment. Let's go with the assumption it finishes above 10% out here. Then this sets up for one more push, and then we get to that seventh wave move, that wave G out there inside of the S&P 500. So that's how I'm taking a look at it, and that's why I'm really breaking today's morning or first discussion here between shorter-term traders and they're just trying to do my job, man. So that's about the S&P 500. Now, if you were trading the transports, which have had a nice move today, they were first up. Now they're down about 0.4% out here. And we'll take a look at this chart, and you'll kind of see what I mean out here. Now, the transports have given us a signal that they are done with their move higher for the time being. Now, that's as a 121. At 4 o'clock, it could be a different message, because if price finishes above Stevie's red line, which is 98.90.56 to be exact, but that number is going to change by 4 o'clock. But that's a pretty close enough. What kind of vocabulary is that? You know what I mean. If it closes above Stevie's red line, then it's telling us, hey, I'm not ready to continue headed lower. But in this case here, you have a completed A to B equals CD. You did have a bearish reversal signal a couple days ago, the old dark cloud cover. We did actually have some follow through yesterday when this gapped to the downside. Gaps are your friends. In this case here, gapping to the downside was follow through. The problem was that follow through was met with support of Stevie's red line out here. So today, we're testing that red line. In essence, we've done that. We're moving below. And so if you were to ask me, where is it the transports are headed to, doesn't mean the Dow will head there, but or that the Dow has to do the same thing. Doesn't mean it has to. But the price target on the transports would be about the 9,500 level. That little dashed set of red dashes on my screen out here, that would become one of my targets. Of course, you would go ahead and do your retracement levels and so forth. I'm not going to do that right now. I don't mean like doing that with the Ninja Trader tools out here. But at this stage, as we speak of 122, the transports have given you and you got a nice seventh wave move. I didn't say that, or if I did, I'm repeating myself. So what? But there's your seventh wave move. It's why we pay attention to those. This also happened to have a TD sequential count 3 or 4 days ago as well. So it just says that, doesn't say, hey, it's the ultimate in tops and things of that sort. Just says it's time for a breather and time for price to pull back. That's the signal coming from the transports out here. So hopefully that helps both at least short-term traders out. Longer term, you just want to stay put. You just want to stay put. And shorter term, what you want to be doing is praying that there's some kind of pullback or retracement out here to figure out where to add to or get into long positions inside this market. Because I'm going to tell you, and you know this, and I am saying this with conviction, I don't care what others are telling you about the market forming a big major top out here. It is not in the cards. The Santa Claus rally has already begun. And what we want to do is we want to make sure that we get in that rally. It's going to last for a while. As far as price levels, where the S&P 500 is headed to, as an example, we're just going to switch over to here. The next level is 2682. That's top of the red trading range, boundary line. To look at in the very red of my screen, 2570 might be a little bit that. And that's where 25 right now. It's going on short term. And then with conviction as to term, where's the S&P 500 going? It's very we look at New York all-time just a few days ago in the basic trend line as well as the volume summation index out there. That is not how that indice makes tops. It just doesn't make tops that way. Instead, what it does tells you that there's going to be higher prices coming at you. Now, we've got Mike who sent a question, and he said, basically, would you talk about gold? And I will. What's your favorite golden thing? If you have a favorite golden thing out there, maybe it's a gold coin. That would be cool. My favorite golden thing is this little temple right here. So if you ever get a chance to go over to, Mike, you said to talk about gold, and it's just kind of, spur of the moment, hit me out here. Watch us on TigerTV. This is, as you can see, it's a nice little temple. This is in Kyoto. It's one, for those of you that have been to Japan, this has broke up. This is one of the more popular temples. There's so many. We could go over to Kyoto, plan later. out there because it's a blast going to all the different temples. But this one here, I think it's called the deer something or other out here. But that's one of my favorite golden structures. That's not what Mike was talking about. Mike wanted us to go take a look at, hey, Steve-O, what is gold doing? So if we go take a look at Goldilocks out here and what it actually has done far, you and I, we have talked about how gold's next level of support was going to be the bottom of its weekly market profile. And that level is 1261.70. Now, the actual low that we have seen is 1262.80. I ask you, will you be kind enough to cut it slack of $1.10 out here? Please, cut it $1.10. So price just simply came down and tested a level of support. You have to anticipate that level of support was going to hold. Why? Because that is a bullish structured box out here. Now the question is, on this bounce, will price close over 1275.60 or trade at 1275.20? We'll be right back. We'll talk a little bit about the gold.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 31. S&P is down about 7. So we were taking a look at gold before we went into the break. Now, yesterday, and this set of charts that we're looking at, it shows us our weekly. That's on the right-hand side. Next to that, to the left, is the daily, then 240 and 60-minute market profiles. The ones that you and I are really focused on and that are more important to us with regard to understanding what gold is communicating to us. Number one, we know why gold found a bottom earlier this morning. Just simply because of that support. You and I had identified these levels here a couple weeks ago when it first came up onto our system. And so it should be no surprise that gold found support there. The surprise was really yesterday when there was a brand new market profile that formed and price closed below that level. Now what we've seen is this counter trend rally where, and I say counter trend, I still mean counter trend out here, because price found support where it was supposed to and then found resistance where it was supposed to as well, which is the bottom of that new daily profile. Now, if price can close back above that daily profile, then there is the opportunity for price to run up to the 1289 level. The 1289 level happens to coincide close enough with Stevie's red line. You can see it's priced right now at 1289.80. Coincidence? No, there's no coincidences out here. And then that would go ahead and extend the counter trend rally. But at this stage of the game, until we see a price close above Stevie's red line, that is how you have to read this. Well, you don't have to. That is how I will go ahead and read the action that we see inside of gold. Of course, what you and I also know is that the direction of gold, the direction of bonds, they are controlled by one thing and one thing only, and that is the yen. And so as we take a look at yen futures out here, you can just simply see the directional, the bar-to-bar 10-minute correlation that we have out here. It's a beautiful thing. And then that says, hey, Steve-O, well, what's yen futures doing? So if we go take a look at yen futures out here, we've got like a little doji-style hammer candle towards the bottom of support. Now, here's the really cool thing, both for gold and for T-bond future and for T-bond futures as well. Let's say that by the session end, what we get out here is a hammer candle in gold down around the bottom of this horizontal consolidation. You can say, hey, Steve-O, it didn't get all the way down there. That's okay. This tells us, though, that at these bottom levels, at the bottom of this consolidation, you can see that each time, and then when I say each time, I'm coming back into the day of March in 2017. Each time down around this level is when the cavalry has shown up. Because if you take a look at the time after that, would have been May 11, 2017. Nice little bull sash candle that forms. Then we have another little bullish engulfing candle on July 11th, 2017. Now, at this stage here, I don't know if it's going to be a hammer candle, it's going to be a doji, it's going to be none of those candle sessions out here. But if it were to be a hammer session, well, that would be cool because you would know that the cavalry is attempting another attack on the sellers out here. And if price was able to close above Stevie's red line, that price is probably about 0.891217 right now. Then that would say, in the case of gold and T-bonds, that could be an important bottom this morning. Do we know which is which? We know what to look for. No, I mean, you got to take this one step at a time. You've got the daily number, so it makes it real easy. We've got the daily chart in the Japanese yen to take a look and understand, hey, what kind of candle is it that forms at today's session end out here? To me, that is really the cool thing about each of these charts. And Mike, who wrote in and asked me to talk about gold, there's one other thing that you and I can look at with regard to messages out here. And that was yesterday we took a look at the XAU, the day before I think the XAU. Today, because everybody just trades this, let's just look at the GDX out here. And so what has transpired inside of the GDX? Well, guess what? You can see that at the bottom of our screen we have our price oscillator. You can see how that is at 0. And you can also see how today's action, price moved up and did what? It tested Stevie's red line. This has been in a downtrend out here. not until price closes over Stevie's red line does it have any chance of maybe ending that downtrend, maybe having formed a bottom 2, 4, 5 days ago out here. But at this stage, it gets very dangerous over the course of the next couple of sessions out here. Please refresh the charts is one of the things, so we can do that. We can do that for you. That's no problem. Or I'm not aware that there's a problem, but charts look good. Okay, charts are looking good. So I can't really refresh. Okay, so inside the GDX, here's what we're looking at. You can see that today, or if you can't see it, I'm going to describe it to you, that what price has done so far is just run right up into my red line. Now, because that price oscillator is 0, and it's not so important today, but deflecting and not closing above that is giving you an absolute bearish message out here. Doesn't change the bullish until you see it close above that. And in fact, because we're at the 0 line inside that price oscillator, if in fact this turns down and continues to move, price continues to move lower on Monday out here, you now have a falling price oscillator below 0. That says we go make a run for what could be just simply an A to B equals CD to the downside. And what that pattern looks like is as follows. So here comes your price targets inside of the GDX. As we do this, click. It's going to be about 2130, 2063 out there. So, Cam, if you're a buyer of the nugget, sounds great. You need to see the GDX close above Stevie's red line. Otherwise, just simply be very careful out there. Okay, so that takes care of Mike's question out here. We're going to check real quick, see if there's any other questions. If not, I don't think there's anything inside the den that you guys have requested, but if so, just go ahead and repost that. James wants me to look at Apple. So let's go take a look at Apple, see what it's doing. It's off 42 cents out here, trading out at 154.97. Now, James, when we take a look at Apple, the Apple chart, this is the daily chart that we're looking at, and get rid of this red line out here. Here's what we know about Apple. Thus far, we can see that it's been in this little downtrend out here. And part of the downtrend in forming this, we can see that 2, 4, 6, 7 trading sessions ago. So, a little over a week ago, this had formed a new daily profile. Now, that profile, let me turn off the weekly for you. The profile is basically bearish from the standpoint that it formed below the prior daily. So on my chart here, when we take a look at the blue lines are the daily profiles, the green lines are the weekly profiles. So no structure-wise with regard to the set of profiles, it's neutral. And we say that because the center is truly in the center of this box out here. But here's what we know. Price is running right into resistance of that daily profile, 155.07. We're trading at 154.97 out here. A close above that level would be good. And in fact, a close above that would then say that price ought to head to maybe even 159.65. But if it doesn't close above that, price should head down to the 152.59 level. And that was for James taking a look at Apple. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Tim says, Steve, where do you see an entry for XRX? I'm looking at this as a longer-term hold. So let's go take a look at XRX. What I'd like to do here, Tim, is let me find that panel that I've got that has the three different time frames, especially when you say you're looking for a longer-term hold. So here's our three time frame charts. XRX, I'm not sure what it is. We're going to find out. Oh, Xerox. Okay, so you're looking at Xerox for a longer-term hold. So here's what we know about Xerox right now, and it's really going to be the daily that you and I are first going to look at out here. And we can see that it's trading back inside its market profiles. I don't see anything, major volume or anything off of the top out there, so to speak. So your entry price that we would first come up with out here is going to be the bottom of that box, 32.47. Ideally, Tim, as prices coming back there, and it should find support because of this wide-ranging bar that had some nice volume behind it on August 1st. There was 5.7 million shares. You're coming back with less than 5.7 million shares, certainly, and preferably with less than the session on September 18th, which was 1.7 million shares. That would be ideal for you. So you want to back off with light volume. Yesterday was 1.8, the day before 1.9. Those volumes are not going to kill you. That would be the first place of entry that I would look at. If things start to accelerate or you start to see it close below 32.47, then that says, okay, we need to wait. Wait till where? Wait till when? Well, the weekly box, the weekly set of boxes are way down there. When I say way down there, it's a $32 equity. $30.03 is the way down there. But that would be the next place that you would take a look at. So I don't see anything else that's unusual. Well, when I say that, I'll show you what I'm referring to. I'm just looking at the daily chart. Now, I think on the daily chart, you're very likely to get that pullback to that bottom profile level, 32.47. We can see prices below Stevie's red line. Tells us there's just simply a retracement in a bull market inside of this equity. And because we had that wide-ranging bar and volume out there back on August the 1st out here, so I see why you're looking at this. Longer term, let me just change this chart, put it on a weekly. We're going to have a different, well, that's not correct. That's interesting. Let me just reload all this data. Odd that it's doing that. And maybe I just need to reboot my computer. Maybe that'll solve the issue out here. That's probably the first thing, but I can't do that during the show. In any event, this got 32.55 on it as a level of support. So on this, let's go take a look at the A to B equals CD pattern that is on this chart. It's going to be easier to take a look at the volume. So here's our weekly chart. And our B point, or the swing point, Tim, that we're going to use is the week that began February 20th. That had 7.8 million shares. That was passed with 20 million shares. So there's your A to B equals CD pattern that has formed on a weekly basis, or has confirmed on a weekly basis, and its 1-to-1 price projection is 34.51. But I would say at this stage of the game, pullback, if we see a pullback on light volume, more likely than not, this is going to be an extended A to B equals CD pattern, and you're going to get back up into the 36.64 level. So, Tim, check back in with me as price continues to pull back, which it should in Xerox. And thanks for writing in. Danny in Atlanta wants to take a look at bonds. So, Danny, what would you like to look at in bonds other than what I'm going to show you? But go ahead and type that in, and I'll make sure that we get to that. In the case of bonds, very much like what you and I were looking at in the yen, at this stage of the game out here, until price closes above Stevie's red line, the message is that this wants to make an A to B equals CD to the downside. The question is it just going to be 150.34, or is it going to be 149.04, or where is it going to be? Now, we looked at the Dow Jones Transports, you and I. We noticed that that had a couple of completed patterns, right? My recollection, it had a time to mark sequential count. What did the 30-year Treasury have back? Let me get the actual date. That had a TD sequential count back on August 30th. An A to B equals CD to the upside was out there. Well, the 30-year Treasury had completed an A to B equals CD to the upside. It was the 1 to 1.618 version of it. And you got that little shooting star candle back here on August 29th, followed up by that little seventh wave move back here on September the 8th. So you can see you've got several patterns that said that bonds should start to head lower out here. And they did that. Now, they needed the aid of yen futures to do that. So both topped out at the same time. So, Danny, we've got to be paying attention to what goes on inside yen futures. But it looks like from the A to B equals CD side of this trade, this has got further to run to the downside out here. And there's your A to B equals CD to the downside. Your question is, did it hold support? Well, in this case here, what's held has been resistance, which is Stevie's red line, as well as the TAS profiles. Let's go over and take a look at the 30-year Treasury, just like we did for gold. And let's go take a look at the different time frame profiles out here for you, since I'm not sure which profiles or time frame it is that you are taking a look at. So if we put up the 30-year here, we're going to get the 60, 240, the daily, and the weekly profiles out here. We don't have any, I'm sorry, on the weekly side, we don't have any weekly profiles. All we have are retracement levels, which, hey, those are good tools out here. We're trading below the 0.618 retracement level. I'm referring to the low from May, the week of May the 8th, up to the high for the week of September the 4th out here. This says to me, Danny, we're looking at 150.21 if we were just going to go ahead and use retracement levels. We're below the 0.618. The daily, you can clearly see on this chart here how we are below a daily box that formed a couple of days ago, much like gold, right? You know, the price behavior between these two is uncanny and so similar. But what we saw was a break below, and this box here, gold's box was a bullish structure. This is a neutral structure. It doesn't matter. You break support. Your question was, did they hold support? No. On the daily chart, it broke through support. It did that yesterday just slightly. Today, I don't know where it's going to close. But if it closes below 152.10, the answer is no, it did not hold support, and it wants to head lower out there. On a 240-minute basis, we're below support as well. On the 60-minute time frame, we're just trading inside the box out there. So, Danny, I hope that that helps you out with regard to what T-bond futures are doing. And looks like they want lower price, but we'll pay attention. You and I, we have got to pay attention to what is the candle signal on the Japanese yen futures when it closes today. Because if it's a hammer candle, that is a message of, that could be a bottom. Then if we see price get above Stevie's red line, we're going to say, guess what? That was a bottom at about, I don't know, what was it, 9:30, 10 o'clock this morning, as gold was getting down to the bottom of that weekly market profile. All right, so I think we've covered all the questions at this point out here. We're about to go to break, and we'll come back with the last 2 minutes. You've got the Dow's off 33, S&P is down 6. We've looked at that. We haven't looked at his light sweet crude. Let me punch that up here for you real quick as we take a look at light sweet crude. Let's go see what it is doing here. It too has broken through the bottom of its daily profile. That says light sweet crude headed to 48.84. And if it doesn't hold that level, $45 even Steven. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last question that came in was whether or not I have had any luck at with software finding a software package that mechanically identifies the candlestick signals properly. And the answer is yes. That's what I use when you take a look at my white-colored charts as you watch this in Tiger TV inside the den out here. This is the Nissan candle scanner. It integrates into the NinjaTrader platform out here. Now, I purchased this software when it came out back in 2006, 7, something along those lines out there, because Now, at that stage, I was just really trying to just understand candlestick stick signals. And the cool thing is that when you combine these signals, and you learn these, you can learn these on your own. You know, this package is like $1,200. I've tried other packages out there to see how they work, and basically most of them don't work that well. Not as well as these. There's only one thing that this really doesn't pick up. And I've got everything turned on right now. It doesn't pick up the 4, 5, 6 candle evening star, morning star pattern out there, which is very powerful. But you'll know what to look for after a while. But the importance of these candlestick signals is when you're up against support and resistance. In the middle of a move, it's just kind of interesting information out there. And just because something says it's bear sash, which is true, you have to understand that is a type of a candle, just like a bull sash, that doesn't require a trend in place, much like a bullish or bearish engulfing does out here. So when you see those, they doesn't necessarily mean that it's get bearish out here. You have to understand what the trend was, because truly the trend is your friend out here. And I don't use, as you know, I've taken all the Japanese candlestick signals and I've identified which are the proper 7 that we need to focus on that are bullish, and they have their counterparts on the other side that are bearish, and it makes it a whole lot easier than simply taking a look at all of these candlestick signals that are out here. So that answers that question. Yeah, and I've been using this for years, and it is a great tool. I only wish it integrated into my trading strategies. Then it would be a beautiful thing. Folks, have a fantastic weekend. Stay tuned. Your favorite polar bear in mind. David White's up next. After that, Tom O'Brien from 3 to 5. We'll see you on Magical, Magnificent Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.